Okay. There's only two setups on these black charts you need to understand. What these red lines are called high value area. Okay? The plus signs, the green plus signs are low value area. Very simple way how to trade the system. If the moving averages are up, I keep telling you, 2 or 3 days a week, you're going to see big angles up in the market or big angles down in the market, meaning trend is going to be hard up or hard down. Today it's hard up in crude. Yesterday we caught the exact high, play that video on crude. Now we caught the exact low again. How? Because the moving averages are on an uptrend. So the methodology says this. I only have two setups I need to understand. A number 1 and a number 3 setup. That's it. What a number 1 is a deep pullback if you're in an uptrend to low value area. Right here. Low value area are the green plus signs. High value area are the red plus signs. So if my moving averages are, my magenta is in an uptrend. There's my angle. Right there is my white line, my slower moving average. If I get a pullback within 2 ticks of this plus sign, right here, it is a buy with a pull-in with the Renko bar. My 3-sim Renko bar. Use a pull-in bar. Look for a doji or spinning top on it. Close above it. There's your pull-in bar. Now, if you're in an uptrend, you're not allowed to sell high value area. You're not allowed to sell high value area. You're not allowed to sell these red dots in an uptrend. You can't do it. You're not allowed to do it. Not allowed to do it on the black charts. You must let it break through the red, retest the red within 2 or 3 ticks, and look for a pull-in bar on your 3-sim Renko. Look for a doji or spinning top of these lows, and look for a long. So you had a long here on the number 1, and you had a long here on the number 3. These are the only 2 setups you need to learn all year long off these market profile levels, off these black charts. That's all we need to learn. A number 1 and number 3. Hey, Francisco, good morning. Number 1 is a deep pullback to the green line. A number 3 is a breakout of HVA, retest HVA. You cannot sell HVA in an uptrend. You must buy the first test of green. Okay? This is the look how accurate this is. Yesterday was just the opposite, right? Yesterday, if we look at the highs, look how my number 1 called the high. And then I had a number 3 over here. It was just the opposite, right? We sold the high on a number 1. Both were number 1s. We sold the high because the magenta was in a downtrend. And then it broke down through a LVA because you're not allowed to buy LVA, but the magenta's in a downtrend. You let it break, retest. So we had just the opposite yesterday in a hard move down, right? And that sucker caught that big move down. Look at the number 1 called the big move down right here. Called the exact high, almost to the exact tick market profile. And she moved all the way down. Where this morning it's just the opposite. Now it called the exact low right here. And the continuation for the number 3. So you see there's the accuracy is very uncanny with this when you know how to trade just 2 setups. It's either going to be a number 1 or a number 3 every day. Okay? On the black charts. That's it. Number 1, number 3. If you're in an uptrend, magenta's in an uptrend, you buy the first test of LVA. You let it break out of HVA, retest HVA for a long. If it's in a downtrend, it's the opposite. Like yesterday, if it's in a downtrend, look how my HVA called the exact high almost to the exact tick yesterday. Magenta was down all morning. Even though you get a cross here, it doesn't matter. Magenta's down. It's a longer term moving average. That's a short. Then you break a LVA, retest LVA, almost retested within a couple ticks. It went above a little bit. Doesn't matter. Pulled us in. And then we have the big giant short, and it just huge. Market profile nailed it. Okay?